Well, it's been a little bit of an odd month for the month of August as we start in September. And when we look at the stats, you'll see why. Hi everyone, Richard Payne here from Halifax Homes and Lifestyles here in the amazing city area, let's call it a city, of Halifax in Nova Scotia. If you're moving here, if you're trying to get information just about the general market here in Halifax, Nova Scotia, then this channel is absolutely the place that you want to be, because we have neighborhood videos, we have stats videos, we have information for buyers, we have information for sellers. Get the message? Hit the button, subscribe, and let's look at some stats for the month of August, which just finished. Now, as I said at the beginning, this is a little bit of an interesting month because when I look at August this year and I look at August last year, it's really, really similar. And when I look at July, the numbers are really, really similar. So we double checked, we triple checked, and just made sure that the numbers that we're looking at actually are correct. Because like I said, it's just a little bit weird that everything's happened this way. But first thing we want to get into is the average price. Now, the average price for the month of August was $597,000. Now, compare that to last month at $606. We're obviously down a little bit on that month, but compare it to last year at $536,000. We are up 12% on average in that area. So let's get into the interesting stuff, because sale to list price this month was up 2.5%. So listed at, just having a look here, 590, sold at 598. That gives us roughly 1.4% sale to list price. So a little bit over, but not that much. And we'll go into some market details to tell you which are the markets that are actually performing over and which are performing under. But like 1.4%, that's better than last month, because last month it was at 2.5%. So like last month was a little bit higher. Now we're kind of creeping back down, but last year it was like 0.7%. So pretty much flatline sale to list price last year. But the good news is obviously that prices are still up on last year, 12%. But we are absolutely bouncing around that $600,000. Last month was slightly over, this month was slightly under. The month before that, I think we were kind of like up at like 615, something like that. So we're definitely hovering a little bit around that $600,000 number. So to give you an idea, like again, on average, covering all of the areas, and we'll do the specifics later on, but on average, we're hitting like $600,000, but we're hovering around there. We're not like, all of a sudden we're creeping up. So go back like 2-3 years ago, it was like constant up. Now we're kind of like flatlining and just doing this sort of a thing around the number. So that's what's going on for the average price. Number of houses sold. So this month we sold 366. Last month we sold 362. Let's call it basically the same number, which is odd to start off with. But then when we look at last year, we're at 391. So it's kind of like the same all the way through. And this is where it's like, this is a little bit weird. Now let's look at the number of homes that were actually active for sale at the end of the month. This month, 668 homes active. Last month, 661, like 7 homes different. Last year, 656 were active. So you can see that basically we're staying the same. It's like you look at all of it and it's like, yeah, 1.8 months of inventory this month, 1.8 months of inventory last month, pretty much 1.8 months, 1.7 months of inventory last year. So it's a little bit odd. Like you kind of look at it and go, that doesn't make a lot of sense. Like all the numbers basically are staying the same. Now, days on market, this is definitely a change. So 31 days on market, 1 month this month. Last month that was 27, so we're up 4 days on last month. Last year it was 20 days on market, so we're up 55% on how we were performing last year. So when you look at that from a buyer's point of view, why would days on market be increasing? Well, let's all look at interest rate hikes. Like that's absolutely happening. But you can see that what we're putting up for sale and what we're selling, if those are staying the same, what we're seeing is some of the older inventory is actually now starting to sell, hence longer days on market. So that's where we're at. Now there's definitely exceptions to this rule, and obviously we'll dive into the specific neighborhoods and we'll see which ones are not hitting 31 days on market, if that makes sense. So that's really what's going on with that stuff. Now, some of the other bits that we always like to look for, of course, is sales to new listing ratio. This is a little bit different. So this month we are 366 sales. Now we listed new homes, so new properties came onto the market, only 425. That gives us an 86% sales to new listing ratio. Last month, 362 sales, 446 homes listed. Sounds very similar. 81%. So yes, we're up a little bit on that. But last year we had 391 homes, but 562 new listings. So that was a 70%, and therefore we are up 16% on last year. So why is that a bad thing? Well, if we are having more listings and not selling them, then that is basically a bad thing for the sellers, because obviously there's new listings, but we aren't eating through the actual number of houses that are being purchased. So from a seller point of view, and let's look now at days on market, see how they're starting to line up? That also tells us, because the days on market are increasing, because we've had, compared to last year as well, we're actually seeing more of that sales to new listing ratio where the new listings are less. So we're putting less houses up for sale. So we've got to go back to the older listings in theory and start actually selling those. That's kind of the way it works. So from the seller's point of view, there is still not a lot of houses for sale, but we've got longer days on market. So that tells you that the buyers are starting to be a little bit more picky and taking their time about choosing which of the houses they actually want to buy. Because 31 days on market, and yes, there's a little bit of new construction, but like there wasn't a lot of new construction that was actually sold this month. So it seems like we had a little bit of a boom in May and June in terms of new listings coming on for new homes, and therefore new construction selling, longer days on market sometimes for that. But builders are still in that state where they are waiting to put their houses up for sale until they're more or less ready. Because builders were definitely wanting to get like 2 to 3 days on market before they go conditional. And because there's not a lot of choice in the houses for sale, that's typically what's been happening. But they haven't been listing their new stuff for sale because they're probably not at the stage where they're more or less ready to move in, like 2 months away. So hence the stuff that's going is the older properties on the market. But like I said, from the seller's point of view, you've still got to be attractive on the price and attractive on the condition for the location that you're actually at. Because what you've really got to consider and really concentrate on is being the best fair market value in all of your competition. So that's the key thing to focus on here, is what is the best fair market value for your property in the area against the properties that you are competing with. Because you don't want those other properties to be selling and using you, because you're a little bit higher priced, to be selling their properties. There you go. From the buyer's point of view, yeah, we've not got still a huge amount of choice of properties to actually go and buy. So you still can't be like crazy sitting on the fence just waiting for that unicorn property to come up, which, yes, we did some things about the 3 common mistakes that buyers make. Unicorn property was one of those things that you just can't sit on the fence and wait. So you've really got to decide what type of property you want. And if it matches like a 6 or a 7 out of 10, then just go for it. Because time in the market is much better than waiting to time the market. Because everybody's sitting here now waiting to see like, well, what's the market going to bring in the fall? What are the interest rates going to do? Should I start buying now? And we always say, look, stop trying to time the market, because timing the market is just incredibly difficult to do. You're better off just taking the plunge and spending time in the market, because now at least you've got something and you've got your foot on the market ladder, and now you can kind of stop stressing too much about what the market's going to do and everything else. Yes, interest rates, but we all know that we're heading for a bit of a recession after the boom we've had for the last 2 years. We're still trying to deal with inflation. We're still playing with interest rates. The one good thing is that if this recession carries on and really starts hitting us, because it's hitting the US definitely, they're just not admitting it yet, but we are going to go that way. Real estate is one of the major triggers that they can use, and we're up at like 5.5, 6% interest rates now on mortgages. So they've got some space to tweak that number. pull it down, and then actually start trying to get the economy out of a recession, but also they've still got to manage inflation. So a little bit of a thing, but watch what's going to happen, because it's going to be interesting over the next 6 months to see how that interest rate, and if we hit recession, what that's actually going to do to the market. So getting into, because that was just a little economic sideline there, but let's get into some specific markets now. Number one was Timberley St. Margaret's Bay Prospect Upper Tantallon area. Their average sale price down there was $583,000, 99.3% sale to list price, so getting underneath the market there. 26 days on market, 39 homes were sold, 73 were active. That puts them at 1.9 months of inventory. No real surprise in the fact that number 2 and number 3, it's like the same theme. Like, we can always pick the top 4 markets are basically going to be the same, and they just change around a little bit. So into number 2 is East Hants, Colchester West, which is basically Enfield, Lance and Elmsdale area. Their average price point there is now $484,000, just a smidge over asking price by 0.7%. 33 days on market, so a little bit longer there. 35 homes sold, 107 homes active up there, which puts them at 3.1 months, which is one of the highest inventory levels in the whole of HRM area at the moment, 3.1 months. Coming into number 3, we are Lower Sackville. So Lower Sackville average price point there dropped off from its high point at $460,000, but 6.2% over asking price. So they're still a crazy strong market. 14 days on market, so not doing too bad there. 27 homes sold, 13 homes available, 0.5 months of inventory. So again, that Lower Sackville market price point has absolutely come up, but still so popular for everything that Lower Sackville actually has to offer. So that basically covers all of the information that we've got this month. Those are the stats for the month of August. September it starts off quiet because, you know, it's that Labor Day weekend. But once we get that over, once we get that first week done of kids back in school, we are really kind of keeping our fingers crossed that the number of listings is going to start showing up, priced accordingly for the market location, for the condition of the property and fair market value. And let's get some action here, and let's actually get some properties listed, and let's get them sold. Let's get the buyers off the fence, and let's spend some time in the market. Now, if you have any questions, any comments, leave them down below. Don't forget to like, subscribe and hit the bell. And at the same time, if you have any questions at all, you can schedule a meeting with me down in the links down below as well. Let's have a coffee, let's have a Zoom, let's do whatever we've got to do to find you the right property, or at least get you up for sale, so that then we can use the marketing strategy and get you moved.